Shocking grey market premium at 35%. Will we get massive listing gain or is there any hidden risk in this Corona Remedies IPO review? Watch till the end to find out. Today we'll follow this order. First we'll talk about the company. Corona Remedies, what does it do? It basically manufactures tablets, capsules, syrups, ointments under its own manufacturing brand. There are 71 brands or diverts or 71 products in its portfolio. Basically, it caters to women health, cardiology, and pain management. 71 out of the 71, 70% come from these areas, 28 from women's health, cardiology, and pain management. It's basically caters to the Indian market. 96% of the revenue comes from Indian market, and most of these brands cater to chronic and subchronic diseases. Why this is important? Because these treatment for these diseases are pretty much long term and require repeated medications. So these kind of tablets or syrups are taken often, and sales are also on the higher end, and the margins are also a bit higher. And how these Corona Remedies tablets reach the doctors? They have a good set of 2671 medical representatives who aggressively market these products to various doctors across pan India so that they can prescribe these medicines to the patients. This is about the company. If you look at the financials, total income from 23 to 25 has grown 14.6% in FY24 and 17% in FY25. So the growth is good. The company is making income. If you look at net profit also, 85 in 23, 91 in 24, and 149 in 2025, a massive 63.7 profit growth. Profit also is increasing, income is also increasing, debt to equity ratio is also very less. So the financials are good. Let's look at the valuations. If you look at the valuations, Corona Remedies is an Indian company and caters to an Indian market. You cannot directly compare it to something like an Abbott or Pfizer or Mankind, which are pretty much big scale. But if you look at some of the companies like JB Chemicals and Pharmaceuticals, Iris Life Sciences, the EPS is on the right side, it's like lower side, which is very good. The P is bit on the higher side, but the growth in these companies compared to Indian companies are good. But you cannot compare this to an outside multinational company. So if you take an Indian company, actively compare, the growth is good. P is bit on the higher side, but yes, the growth is good. This is the peer comparison. Let's look at the strength. As I said, company is making good profits year on year compared to Indian market. This company is doing good. They are focused on women health, cardiometabolism, and chronic diseases, which is growing 10 to 12% in year. And these are long-term prescriptions. So company is making good money. That is also a good sector to be in. And also there was one CRISIL ranking in which this company was said it was the second fastest growing company out of the top 30 pharma companies in India. It has a strong growth momentum. That is one of the big advantage. Also, it also empowers or make sure this kind of ratings will give you a strong positive outlook in the market. Next, it has two manufacturing facilities. 70%, not 100%, 70% of the manufacturing is done by these two manufacturing facilities, one in Gujarat, one in Himachal Pradesh. And also there are plans to commission a hormone manufacturing facility by Q1 of FY27. And one of the major talking point is the GMP is around 365, which is around 35% of the IPO price, which is shocking. Assuming that most of these valuations are coming compared to an Indian market, this GMP seems to be good. Let's look at the risk. Some of the risk, as I said, this is a fully OFS issue. Nothing is going to the company, but still GMP is high. You need to make a note of that. Next is competition risk. Strong branded peers. Like if you go to any doctor or some in tier 1 cities, some people want medicines from a like Cipla or some pharmaceuticals or a Abbott or a bigger brand name or an international brand name. And also competing with them with price might be a bit tricky. So they need a aggressive marketing team to market and a strong doctor's commitment to prescribe their medicines. That is one. Second thing is API dependence. API is nothing but a key ingredients which which is used to manufacture the tablets. If you take crocin, what is the API ingredient is paracetamol. So those are imported heavily from China. Any geopolitical risk will be a major challenge. And as I said, right, 60 to 70% they do own manufacturing, but 30%, 36% of the revenue comes from outsourcing also, third party manufacturing. Any quality risk might be risk also there. And also, as I said, right, 60% of the revenue comes, 60 to 70% of the revenue comes from women health, cardiology, and pain management. Any underperformance or competition in these categories would impact growth. And they are not exporting. One is, this is a positive as well as negative, because it is not like what I say. It does not have any geopolitical issues of marketing to US or any disruption in the US, but it is only in Indian market only. That is also one other risk. If the anchor book is also released, nothing great, nothing bad, decent set of anchors, nothing, no major international names, but decent set of anchors are there. So before we go to the final verdict, please like, share, and subscribe the channel for my IPO reviews. Just the high level IPO details: opens on 8th, closes on 10th, allotment is on 11th, refund on 12th, and listing on 15th. There is a massive 5-day difference between 10 to 15. Keep in mind. Retail, it will cost 14,868, and same as where 2 lakhs approx for small HNI, and big HNI around 10 lakhs. Number of application reserved also is on higher end. These are the IPO details. Let's look at the final predictions. See, basically the company has good financial track record, has good growth, and good visibility in the Indian market. It is also rated a top 2. It has a low debt and has good expansion plan also. GMP is good in spite of being full OFS. Bit shocking, but yeah, it's a Gujarat based company. They tend to grow, but yeah. But what I would say is wait for the last day 2 p.m. If the QB subs are like more than 50 to 75, this is one positive sign. There's no negative trend in the GMP. It's at 35%. By 10th, I don't know, it may be 10%, 5%, or 50%. So look at the trend also, is it positive or negative? And so this still almost till 15 there is a lot of time. Just go through if there are any major geopolitical news or secondary market is down or is there a market crash, that will have an impact on the listing also. As of now, I think I'll be applying for listing gains. Long term, there are other major listed players which can be tracked, but this is what I think I'll be planning to do if everything holds good. What you will be doing? Please comment on the comment section. Thank you.